Bitcoin's dominance as what it is now established. It's clear. It's institutionalized. That's over. So does it matter about the rise of these other things? That they're not in competition with each other, but human behavior is driving that. And I think as a macro guy, it's actually to my advantage, because if you call it shitcoins, I want to know about it, because I know there's opportunity because you're being dumb.
My projection for Bitcoin for the end of this year is north of 250,000. So I think we've got a lot of action to come.
You mentioned that you think it's going to go up again, and you sound pretty bullish, and you don't sound like this is the beginning of a long crypto bear market like the one we just went through. Why is everyone still so bullish after we've broken through every technical indicator? We've gone down a hell of a lot. We went down 50% on Bitcoin and we've just recovered. Why is everyone so positive that we're still in this raging bull market?
It kind of is still within its logarithmic trend. So it's kind of just moving around within the range once you look at it in a log chart. So that kind of works for me. Also, all of us got in the background the stock to flow idea and a whole bunch of other cycle stuff, and just kind of general technicals just suggest that it's just a correction mid-market. And in this year, if this is supposed to be the big year, then we should see some of these moves. And for me, I love these corrections because they're out of the way. Because then you can think, oh, okay, fine, don't need to think about that again. So we should, it should just continue higher over time. So, again, my projection for Bitcoin for the end of this year is north of 250,000. So I think we've got a lot of action to come.
What makes you think that north of 250,000 is quite a specific number? It's quite a specific figure. You're effectively saying that Bitcoin is going to 8x from where it is today in the next 6 years.
Yeah, so every post-halving cycle, Bitcoin does roughly the same thing in the final year of the post-halving cycle. You generally get this big correction sometime in the summer, and generally it tends to 10x from there. So that's normal. If I look at the log chart projections, it gets me out to about 400,000 maybe on the upside by the end of the year, March of next year. Stock to flow ratio gives you the same kind of thing. So everything kind of suggests that. It looks crazy now, but Bitcoin's a crazy market, right?
Well, I know you're a chart man. When you look at this chart, are you in agreement that after the big crash, I don't know, call it crash, call it correction, call it whatever you want, and we will talk about that. Are you in agreement that this thing's going to come down one last time and then go up? Do you still think we're in an upward cycle?
Look, I think I look at it as a balance of probabilities. I think the probability is it pretty much exactly as Sheldon says, it kind of grinds higher, has a bit of choppy range, digests a bit more of that, all of the price action that we had, and then goes higher. There is a downside risk that this is kind of a wedge pattern and we have another shot at the downside, which we'll probably reject pretty quickly. So it's not clear. It's not out of the woods yet. I don't trade it, so I just hold it. So I don't really care. But I do it I watch it for amusement.
So when you saw the market coming down 50%, at any point, this is, if I'm not mistaken, must be your most serious Bitcoin correction since you entered the ecosystem, right? Have you seen a correction?
No, I started in 2013, early 2013 or 2012.
13, 12. Okay, so there was one correction that was bigger than that, or two.
Yeah, but I also went through an entire crypto winter.
Yes, like we all did.
Yeah.
Okay, so at no point did you have any concern. For you, it was like, okay, market's coming down. I'm a long-term hodler anyway. I'm not trading in and out.
No, because look, everyone's heard me bore on about this all the time. Wall of money, right? It's not like it's a bunch of retail passing a bag to each other. It's actually real investors with real size buying every dip. And it's like, and most of them still haven't onboarded yet. So they've got all these institutions, they take fucking forever to get themselves set up. But once they get there, they will allocate capital over time. So all I know is there's more capital coming.
So Willy Woo posted a tweet when this correction happened. In the tweet, he said that he showed a chart of who was actually buying this. And he showed that the people that were actually buying the dip were no coiners, people that had never owned crypto before. Do you think that was institutional buying? You mentioned that it takes time for the institutions to get set up.
I think it's both, because there's a bunch of retail who look at the price and think, oh, it's too expensive for me, which is obviously silly because you can buy it in fractional. But a bunch of others were looking at it. My guess is a bunch of hedge funds pulled the trigger because they love stuff like that, right? There's a bull market. They understand there's all this money coming into it, and you're given the gift of a 50% correction in the middle of that, with no real change in fundamentals, you take it.
Okay, now I know your background is like you're a hedge fund guy, you're a traditional finance guy, you've seen it all. The reason that was cited for this correction, if you look at all the data kind of shows this market was over leveraged. So you had a whole lot of people that took too much leverage on Bitcoin, on Ethereum, playing 10x leverage, got liquidated. That formed a spiral of other liquidations, and that's what caused everything to come down so quickly, and also to chase away the weak hands from the market. Having seen that and seen the traditional world, do you think that this market is actually over leveraged? Do you think that the fact that the retail investor is playing in this, do you think this market is an over leveraged market?
It is an over leveraged market, but it's different. I mean, I know it's over leveraged because the guy who cuts my hair, young Filipino guy in the Cayman Islands, him and all his mates are wildly punting, 25x, altcoins. And I'm like, wow. So that's fine. But what's different about it versus the traditional system is it's kind of over collateralized. So everyone gets stopped out. They laugh about it. It's very typical of the space. People but basically joke about it. You see it all over, Reddit as well. People find it funny. They kind of understand the risk they're running. So it's not like dumb retail who don't understand the risk. They know it's a punt and it's a mad punt. But if they get it right, they can make some good cash. So I get it, but it's also not systemic in the risk, because it's not like massive whales with huge leverage that then seeps into the banking system. It just doesn't work that way. So it's actually a lot better, a lot easier. So leverage is going to be a feature of this market, but it means we get a lot of volatility, which is also good, because if you know where you are in the trend, you could be a buyer or a seller and take advantage of it.
I think I agree with you. Leverage is an unbelievable feature of any market. I mean, you can't deny that, because it's actually what drives markets. But usually leverage is in the hands of sophisticated institutions, sophisticated investors. I mean, you don't see people, the average retail investor doing 100x leverage on, I don't know.
Because
Apple.
the difference is crypto doesn't have open-ended losses. It gets liquidated.
It gets liquidated, yes.
Yeah, in traditional markets, that doesn't happen. They kind of call you up and say, hey, guys, you owe us some margin. And you're like, well, I can't afford to. My house is for sale. I've just sold my wife because I've got a liquidation. So you have to sell assets. And that's what's called a margin call. Margin calls don't happen in crypto. They just automatically just close you out of the position.
Yeah, it's automatic liquidations. That's where most of the retail investors actually lose their money. They go in, they buy a Bitcoin, they own a Bitcoin, they put the Bitcoin up as collateral, and then they take 10x leverage on the Bitcoin, and then bang, they get liquidated, and then they're out of the market, and they kind of caved and don't.
And also,
come back.
those algorithms are pretty complicated, right? So, I was kind of running a paper portfolio to try it out on BitMEX, and I got liquidated in a bull market when I was up. I'm like, well, that shouldn't happen. But it's just the mutualization of liquidation. It's kind of all a bit weird. I'm like, forget it. I just don't use leverage.